Alright traders, I'm resuming the video because I just took a second entry long off the EMA. We have a new high, first entry long, pull back, second entry long, and we reach our scalp. I'm going to place my stop loss to break even. This was the second entry long. Why did I take it? Well, because this uptrend needs to get new high, but this is not the only thing I'm taking into consideration. This is a local price action. The major pattern is this right here. As you can see, we had very strong uptrend. We have a break, downtrend played out with the break, 2 legs to new extreme, market moves in pairs of twos. And now that this uptrend is new high, and even this one needs to get new extreme, I'm combining the overall bias, trendline rule that needs to get new high, and even the secondary one that needs to get new high as well. So both channels need to get new extreme. I waited for confirmation. This is the highest high. I'm going to reset the count. First entry long, pull back, second entry long. EMA held once, EMA held twice, which is a good sign that there are buyers at this level. The reason why I went in only with 3 contracts, because market is extremely volatile today, and I had to increase my target profit because the bars are much bigger. So we had a little bit bigger scalp. I'm keeping my runner because we still should get the new high tested, so hopefully we can get some runner. Okay traders, and our runner just got hit. And we're going to continue with our lesson by taking a look at the yes at the end of the day, because this was extremely wild price action, very unusual trading day. Look at the sell-off we had during the overnight session. During the overnight session, there was a sell-off that was a little over 240 points down. I've never seen such a massive sell-off just in an overnight session. This is absolutely insane. Whatever caused it, potential recession scare, potential war in the Middle East, we don't really care. But what do we care about is that once you see this, once you see this amount of price action on a chart, you need to be alerted and you need to approach this market differently. This is not going to be your ordinary trading day where you're going to be trading carefree. Now, this is absolutely rare occasion. The bars were gigantic. Normally when the bars are 3-4 points big, the bars today were 10, 12, 14 points big. ATR was through the roof. So you need to right now come up with a brand new plan, because you are responsible for keeping your account healthy and safe. So what you have to do on a day like this, once you can see markets so volatile, so much more volume than normally, you need to make sure you're going to scale down. Scale down the number of contracts, trade smaller size, go on micros if you need to, or if you're a beginner trader, just sim trade it, get the experience, because everything is moving so fast. It is hard to make a decision. Prices are just oscillating up and up and down. It was not easy price action. This is extreme level of trading, and it doesn't happen often. This is extremely rare, but at least we got to witness it every once in a while. So once again, 240 points down, brought to like a pullback. Make sure you scale down. There's nothing wrong with being on the simulator, because the bars are just so gigantic. The price action rules, they still remain the same. Okay, which means we still need to identify what is the bias using the structure and what is the key entry point. And once this uptrend kicked in, it actually had a lot of confirmation, so it was quite easy to find it eventually. But take a look, when I was watching this, I wasn't even thinking about taking a setup because everything is still moving fast and bars are gigantic. This high low is 12.5 points, which means if you're wrong on a one setup, the second entry long, 8 points. It can wipe out many winning trades from the past few days when the price action was normal. So there is nothing wrong with just sitting here, trying to practice, drawing these channels, drawing the corrections, and see what's going to happen. Eventually, market slowed down, fortunately. The bars got smaller, ATR got smaller, so it was a little bit easier to navigate. But there weren't that many setups at the very beginning. You can see nice uptrend working higher. Now, price action is correcting. You can see how this downtrend doesn't have distinct brought to like a pullback, something like this. It still visually looks like a one move down, which means you have to be careful buying aggressively. There was pretty much no good setup to go long because EMA flattened here. You can see small consolidation. This uptrend played out, and there is no wider channel that is getting confirmed. Everything is too broad. What if this downtrend is going to get new extreme? Now we can't really sell. Why? Well, because the main bias was bullish. So the whole time the price action is correcting. I'm thinking we need to get the new high tested. I just need to time it properly. This downtrend played out with the break, moved to a new extreme right here. This low is lower than the push down here, the lowest low, which means now we can resume going long. New low, first entry short, pullback, second entry short failure. And it better work for a decent scalp, second entry short, because downtrend played out, so it makes sense to expect prices to go higher. But as you can see, this is what can happen when the market is this unleashed and absolutely crazy, because normally the market would instantly go up and create new high, but today, because there's so much action, prices just kept whipsawing up and down, up and down. So very hard to find a good trade that you're confident, because everything is moving so fast wild day. But I decided to mark this failed second entry short. Even this high low is fairly decent for more advanced traders, because at this point the downtrend played out and we expect new extreme to be tested. Prices are pushing above EMA, so because the main bias is bullish, we expect to test the new high, but it will spike up. Can we get a second entry long, new high, first entry long? No, there's no second entry long, and then market enter consolidation, which means we have to identify the support, the resistance, no trade zone. We can buy low according to rules, especially since the bias is bullish. But look at my signal bar, I have a new high, first entry long, second entry long. It would be good to go long, multiple tests, but the second entry long has a bad signal bar body. You can see the bearish bar here. So once again, had the bar been better, we can consider downtrend played out to break new extreme. And why am I not drawing a trend range like this while we have flat EMA? Well, you can't really go wrong by drawing this, but the reason why I didn't draw it, because this uptrend needs to get new high. Okay, this is massive uptrend, and trendline rule says the buyers want to see this high tested, so I expect prices to go to the top inevitably. So this is most likely not going to be a trend range. They're following the trendline rule, breaking new extreme, downtrend played out, push above EMA. There was a great high low. It was 7.5 points big. So once again, these setups that we're talking about, they're mainly great context wise, but you're actually going to take a hit almost 8 points if you're wrong. So once again, still not easy to trade because the bars are big. Brand new uptrend was established. You saw me taking a great second entry low. This was actually a decent setup because the bar fortunately got smaller, only 4.75 as limit order. But because two channels needed new high, this is where everything in price action aligns. EMA keeps holding, providing support. There was a new high, first entry long, second entry long. We still need to get the new high tested for this channel. For this reason, just because this small uptrend has a break new high, we cannot be thinking about reversal. You cannot be thinking about reversal just because this local short-term channel has a break new high. The reason why is that because the big pattern to the left, that needs to get new high. So work with the price action you see on the left, because that will help you predict what's going to happen on the right. And this is why all these early sellers, they get trapped because we don't have a new high yet. Great second entry long, but bar is 10 points. We can't consider. Break a new extreme. There was reversal attempt for the sellers, but once why the downtrend was established and prices pushed back above EMA, small support was formed, and this means look at the empty room at the bottom. Market is not reversing yet. Okay, even though we expect correction reversal, I cannot argue with the market. It's just so volatile. It can have stronger push to the upside. So important support, because this push down was supposed to evolve to slightly wider downtrend if there's going to be switch in a bias in the market. Because we're breaking low and we push back above EMA, this means that there is still some residual bullish momentum. First swing, second swing, third swing confirmation, fourth swing confirmation, new high, first entry long, second entry long, two key entry points, EMA and the trend line, and even this key level, it is not as significant, but it's acting as a support. Great signal bar, only 3.75. So this is once again one of those few setups today where you can consider, because the market made it with a small signal bar. So second entry long, multiple key entry points. The reason why this uptrend is not going to get the new high tested, it's simply because this channel played out and this is just residual bullish momentum. So it no longer needs to get new high tested. Then this is what you want to see exactly. You want to see such a massive spike down that will indicate that the market is going to change bias. Because the stronger the push down is, the more you can right now trust that the market will indeed wipe the previous bullish pressure, and the stronger side are the sellers. There's a new low, first entry short, second entry short, but the problem is it's not full at the EMA. The body is so far from it. The uptrend doesn't have new high. Now I was thinking about lower high breakout pullback here, lower high to test the new extreme. That didn't happen. Market continue to trade to the upside, which means I had to ask myself why prices are struggling to test the new low for this downtrend. So now I have to pause looking to go short. I cannot just take any more lower high because the bullish push was much stronger. There can be easily a case made for a slightly wider uptrend. Break, new extreme, even the wider uptrend played out. Push below EMA can right now indicate resumption that this downtrend is about to get new low. Micro new low, first entry short, second entry short, 5 points. EMA keeps holding, we trade it down. The market needs to get new extreme. Small overshoot, you have a new low, first entry short, second entry short, but you cannot sell below this bullish bar, and there was no break below the bearish bar, so there is no great entry, and there was overshoot. Then you had double trap, which trapped all the early sellers and it trapped all the early buyers. But because it is an inside bar like this, actually it broke lower, so it is technically a double bar entry, but it is just ugly. Your stop loss has to go here, maybe if you have better bar on your chart, but the waveform in this chart is not that great. And now this downtrend played with the breaking low, and the main downtrend played out with the break and the new extreme. So two downtrends played out, and I need to pause looking to go short. At this point I was really thinking we may go back up because two trends played out, but as you can see, the bears continue working lower, and now I have to ask myself, why after breaking new low market keeps trending lower? So at this point, when the push phase is this significant, you have to right now locate bigger channel. You're gonna select the very first swing, and you generally always start the first swing from the tail, and you want to connect the tail to the body of the second swing. That's how most of the time you're gonna draw your channels, because if you select the tail, it gives you the most flexibility how to draw the trend line, and if you connect the body of the second swing, it will solidify that the channel is correct. So this is most of the time how we draw it. Now you can easily adjust a little bit more, nothing is as strict, but this is the basic general rule of thumb how you start looking for trend lines. You can see how nicely the market geometry confirms the trend line, but there was no good setup, only first entry short, first entry short. We cannot get a second entry short. We have a new low mini second entry short, but the signal bar is horrible. It's at the very bottom of the push phase. You cannot sell such a horrible doji. No setup here. Doji far from the EMA. You have a failed second entry long here, which is tempting, but this failed second entry long is a little bit close to these lows. New high, first entry long, second entry long failure. You can see you don't have much room to scalp out before these lows, and EMA is flattening. So the market is telling you there's small consolidation, so more aggressive trade can consider, but I wouldn't try it, especially on a day like this, especially when this is 6 points. No way. If it'd been smaller, maybe break new high, but you're not full at this key level. Can you get a lower high? We cannot. We're breaking the main downtrend, so expect new extreme to be tested. New low, first entry short, pull back, great signal bar, second entry short, downtrend needs to get new extreme, and look at the perfect price action break, new extreme for the downtrend, and now the market can reverse to the upside. Gonna copy it, put at the bottom, felt second entry short, EMA keeps holding, second entry long. Now we have overshoot. If the market is going to continue working higher and we're not going to break the channel, then I'm simply going to widen. But at this point, I'm going to be a little bit careful and I'm going to approach it as potential overshoot, only if it keeps pushing higher. But now, of course, it is way too late. Absolutely insane day. But once again, you have to remember that you are responsible for protecting your capital and your account. So if this volatility is gonna stay the same tomorrow, remember, you have to scale down, trade as small as you can, because this is really unusual. Everything is moving fast and you don't want to get chopped or blow your account by taking just impulsive trade. Or you can take even a good trade that's gonna end up being a losing trade, but because the bars are so big, it can simply wipe your account. So make sure you're gonna scale down. There's nothing wrong with just being on a sim, watching a sideline, or you don't even have to trade it. Just watch market develop, improve drawing the key levels, drawing the channels, and see if you can read the market correctly, where the market's gonna go, and what are the potential setups. But if you are trading this, you need to make sure you're gonna increase your target profit, Because the bars are bigger. Okay, if normally the bars are 2 or 3 points and we scalp 2 points, you cannot keep scalping 2 points when the bar is 5, 6, 7 points big. Okay, because you're gonna have, let's say, 2 winning trades and 1 losing trade and you still end up red. So if the bar is bigger, you need to make sure you're gonna slightly adjust your target profit, make it bigger. You will not even notice it because the move will still be the same because everything is so big, the ATR is big, but you need to make sure you're gonna expand your risk to reward ratio, and your stop loss still has to go 1 tick below the signal bar when buying and 1 tick above the signal bar when selling. You cannot adjust that, you cannot put the stop loss in the middle, you cannot monkey with the trade because you can get stopped out on a pullback. So stop always has to be 1 tick below or above, and you can just increase the target profit. So stay safe. We'll see what the price action will be like tomorrow. Hopefully it will slow down a bit so it is easier to trade. But it's a good day to practice reading the price action because there's simply so much price action on the chart. So I'm gonna wrap it up. Have a good trading day and I'm gonna talk to you next time. Good luck in your trading.